Good afternoon, Joe Victor with Allendale Incorporated, and of course Thursday, April 15th, and let's get right into the meat of the matter. That is fundamentals, how much they matter versus technicals. I'm going to give you some fundamental information that, of course, looking at the 6 to 10 day forecast, and even more importantly, going into early next week, we knew that they were going to be dry, and it wasn't until middle of next week that 24 hours ago, they were talking all sorts of rain coming in by the middle of next week into the greater Midwest. That rain has been taken out. That is fundamentally bearish to futures. And what are we doing at the same time that second half of next week forecast is coming out, making new highs? So fundamentally, nice to see that there's support coming in. Japan is a big buyer of U.S. corn. Nice to see that on the weekly export sales. Corn very bullish fundamentally. But when you look at the weather, look at the planting prospects that are going on out there right now, and of course, central Iowa, central Illinois, 15th was a target date to start. And of course, weather, seedbed preparation, mainly very good at this point in time. We're looking for at least a 2% higher increase in corn acres, and that is from the March prospective planted acres up to the June planted acreage report. That puts us at about 90.5, 90.6 million acres for corn. For soybeans, 5-year average tells us that we're going to be down about 9.9%. 0.9% reduction in beans. So higher corn, lower beans, if in fact history repeats itself. Technically, I'm going to give you some numbers. Get a piece of paper and a pen to write these down. That is the 200-day moving averages for old crop beans as well as new crop. What was resistance is now support. That 200-day moving average and funds big buyers today when it comes to the May beans, 974.5. That is the new support level. When it comes to July, 978.7. And of course, new crop beans, 948.7. That is the old, what was resistance, now new support. The thing you got to take a look at is technically the triple top that we had in the beans, trying to get through that 948 level. We managed to test that yesterday and of course break it today. We did breach above it, and of course off to the races. Seasonals. Take a look at, any seasonal. Allendale can share that information with you as long as you're a trading client. That is, again, seasonal suggest corn, beans, and wheat, we move higher. And of course, whether we are in Iowa, Missouri, Nebraska, Minnesota, doesn't matter where we were this past winter, talking about the seasonalities of these markets, when to have a marketing plan put into place. And of course, we are still very much committed to that. Box option ideas, as well as looking at the seasonalities of this market. Along with it, not only did we see the fundamental, it was supposed to be fundamentally bearish to the market for corn, we did see a 200-day moving average for corn is now new crop corn coming in at 402.8. 406 is resistance. We finished at 394.25. Understand the 200-day moving average. If we start to see, again, same kind of trade where the funds that are in and out of this market, funds starting to become more aggressive money flow into this market, and that of course is, again, breaching that 402.8 level as 200-day moving average. That is an area, that is a target right now that we're looking at. Of course, with it, along with higher corn and soybeans, meal continues to remain inverted. Had a long talk today with Equity Fund out in New York, and that was primarily, again, talking about the soybean meal inversion that continues to hold. We're up 23% year on year in soybean meal marketing's exports. When it comes to oil, we're 48% higher. And of course, when we start looking at the seasonalities, looking at the money flow where the funds are coming into this market, corn, soybeans, wheat inverted. The head and shoulders inversion, we talked about it yesterday in our closing commentary. We still remain convinced that 517 is the target, and that is in the May futures, 529, 530 in the July. And of course, if we even, regardless of heavy stocks, looking for technically a 517 move in the May, 529, 530 in the July futures, and that is again a supply restricted market. Feeder cattle on the day, lower low, lower high, And we believe, again, resistance right now comes in at 115.90, and that is something, of course, that if we take that out, as hogs were able to move higher high, higher low today, and of course making substantial gains in the hog futures, feeders need to take out that 115.90 level in order to point us back north. Right now, looking for, again, where we're buying calls when it comes to corn, we're buying puts when it comes to feeders, and that is, again, a historical spread that seems to be working. Make sure you sign up for the Allendale Advisory Report. Right at the very top dead center of our page on our website. You can take advantage of 13 months of the advisory service. Just follow the directions. You can give us a call at 800-551-4626 or visit the website at allendale-inc.com. Top dead center of the page will get you the Allendale Advisory Report, Allendale Advanced Charts, all the government weather reports that you need. Any questions or comments, feel free to give us a call. Thank you and have a good day.